Right. There are no fire drills planned if the fire alarm is activated, which is a continuous siren with a red flashing light. Please leave the building immediately following the fire exit signs. Phil, apologies for absence and substitutions. Do we have any?
Thank you, Chairman. There are none.
Thank you. Minutes is to agree the minutes of the meeting of the Audit Committee held on, what am I on? Yes, I am. On 10th February as a correct record. Is everyone happy with those, or does anyone have any comments on those? Councillor Robinson with a question.
Thank you, Chair. Just for a change, I have a question. On page 3 of our papers, which is page 14 of the notes, I'm not sure which one. Anyway, the third page, there is a paragraph I genuinely don't understand, which starts in response to questions. And can someone remind me what this is about? It was explained, comments made at the previous full council meetings were accurate at the time. Auditors had identified different issues. However, there was no evidence of financial issues with the accounts and the position not changed. I just don't know what that paragraph is. If we're doing an accurate recording of the minutes, I don't know what that paragraph is about or what it's recording for posterity. Maybe one of my colleagues can remember. Oh, Adrian.
The visiting portfolio holder was Councillor Maskell. I can't expand any further on what it said it is, what it is, but yeah, I can't say anything further on what was specifically said on the night.
We're reporting what Councillor Maskell said. Is that what that's saying?
Yeah, that's portfolio holder,
Okay.
visiting portfolio holder, that's right. Yeah.
Right. It's not what we were discussing. Thank you.
Any other questions or observations? Right, I had one. So the next page, page 15. There was no, and this is halfway down, in response to additional member questions, it was stated there was no single portfolio holder responsible for considering the Equality Act requirements. However, a responsible officer would be assigned. Was that one of the actions?
It wasn't a listed action, Chairman, but I can tell you that is the Assistant Chief Executive in that role.
Right, thank you very much. Any other questions or observations? Okay, in that case, is everyone happy that I sign those as a true record? Yeah, no one demurring. Great, thank you. Moving on. Item 2, declarations of interest. Any declarations of interest not already registered? No. Super, thank you. Actions from previous meeting, if any, Adrian?
There were none, Chairman.
Thank you. Responses of the Council, Cabinet and Council committees to the committee's reports or recommendations, if any?
Again, there were none, Chairman.
Okay, super. Right, in that case, item 5, external audit, annual audit plan. Adrian, you presumably you introduce this and then hand over to Paris?
Just hand over to Paris, really. Everyone's obviously familiar with Paris, so
right, thank you.
To Paris.
Thank you all. I haven't got the paper in front of me, but I'll try and do it by memory. But so the plan in front of you is the audit plan for 25-26, and that plan has been agreed with management. At the time of writing it, it's an indicative audit plan, as our value for money work was still in progress. That work has finished, but we had to share it with management first. But what I can say is nothing coming out of that initial risk assessment changes what's in this audit plan. But we will bring back to this committee a final audit plan just to make sure that we go through that ethical hoop. The plan in front of you is largely consistent with the previous year, so there's no significant changes in auditing standards. There are no major changes to financial reporting standards, and the underlying nature of the business of the council, again, is largely unchanged. So on that basis, we're not expecting any sort of major changes. What I'll do is I'll try and bring to life some of the key aspects in this audit plan and then pause at the end for any discussion points or questions. think it's important first to set the scene of this audit plan. So as committee members will be aware, legislation came in during sort of 2024 that put in a series of backstop dates. What that effectively meant was after a point in time, auditors had to stop work and issue an opinion based on the work that had been completed to date. In effect, what that had done is meant that for some audits, including say Sevenoaks, that work hadn't fully concluded by that point in time, and therefore a disclaimer opinion was issued. So in lay terms, a disclaimer opinion is one where effectively the auditors say we haven't done enough work in order to form an opinion either way. It isn't a confirmation that they're wrong, it's a confirmation that we haven't completed enough work. But the audit findings reports that this committee will have seen will have then detailed where work has been complete, where work hasn't been complete. So that underlying detail is set out in the audit findings reports. The committee will be aware that in terms of regaining assurance, the first hurdle has to be to go through an in-year cycle. That means our aim is to audit the closing balances, the assets, the liabilities, and so, as well as the transactions in year. Last year, we did some of the work, but we didn't get as far as one would like. And that sort of ultimately led to us issuing a significant weakness in arrangements around value for money and a series of improvement recommendations, which, if implemented, will improve the process and enable us to get closer to going through an entire audit. So the audit plan that's in front of you is designed to arrive at that point. Because we don't have assurance on opening balances, we will ultimately still fall into a disclaimed opinion, but the success really is about regaining assurance in terms of closing balances and the transactions in year. In terms of significant risks, so these are where we devote most attention in terms of our audit. There is still a large amount of work that aren't set out in significant risks, but the significant risks for this audit, there's 4 of them. It's management override of controls, which is presumed risk on every single audit. It's primarily work we do around journals, and we'll do that work for Sevenoaks. The second one is the pensions figure. So the net liability on it's probably changed to a net asset, but so it's sort of a small position, but effectively it's the assets and liabilities for Sevenoaks' share of the IAS 19 liability. It's important to note that it was a triennial valuation year in 2025, and so for 2026, this year end, it's the first year where that new member data is used to form that liability. The way that we get our assurance over this is we place reliance on the work of the pension fund auditor, who will be doing extensive work around that membership data. So that will be part of our request to the auditors of Kent Pension Fund. The third risk, you'll see it pretty much on every single council, and that's the valuation of property, plant and equipment. Effectively, this is a very large figure on the balance sheet, and therefore it's sort of an estimate with estimation uncertainty and so forth. So we do a lot of work around the valuation of that estimate and working with management's expert, the valuer, around financial and non-financial inputs to that. And I'm just going to double check the pack. Hold on, I've got the front page. Just to double check I've got the right one. Sorry, apologies. Yeah, so the last one is the implementation of IFRS 16. So this was a new standard that came into effect in 24-25, but it's fair to say that we didn't fully complete our work in this area. So effectively, it's the implementation of a new standard, and that work hadn't completed in 24-25. So we still assess this as being a significant risk to the audit, primarily around completeness. So which assets haven't been included on the balance sheet. So we want to do significant work around that. So those are our significant risks, and largely unchanged from the previous year. in the previous year, we did have a significant risk around the occurrence of the occurrence of expenditure within housing benefits, and members will be aware that that was a significant risk on our audit for a couple of years. Having now done that work and assessed it, we've been able to sort of drop it down to the next tier. We still do work on it, but not at the same level. Our materiality judgment is largely unchanged from the previous year. It's around 1.3 million. And we will report any sort of misstatements above our triviality threshold, which is about £65,000. So any errors that we identify below that is not likely to fall into our audit findings report unless there's a sensitive matter around it. I'll then touch on the other side of the work, the value for money side. The work at this stage in the audit plan is ongoing, but it's fair to say that if there was a significant weakness identified in the previous year, it automatically rolls forward as a risk of significant weakness for the current year. So the issue we had around the arrangements to produce the accounts and go through that process is clearly going to be an area that we will follow up on in the current year. There's nothing else that I want to bring to your attention, sort of known risks of significant weakness at this stage. We haven't identified any. I also wanted to then touch on pages of the pack, pages 29 through to pages, keeps going for a little bit, through to pages 50. We've outlined all of the improvement recommendations identified in the previous audit findings reports, and inside there it's quite helpful. Management's provided an assessment as to where they've got up to in terms of implementing those recommendations. As part of our final accounts audit, we will assess ourselves implementation of these and report back as part of our audit findings report. I think it's remiss of me never to speak about audit fees. So on page 62, it sets out our audit fees for the year ahead. It's important for me to mention that in 24-25, those fee variations, they're still going through PSAA approval. So it's important to note that those are subject to change. PSAA don't increase them, so they're either going to be the same or come down, but that's for PSAA to determine. In terms of 25-26, at this stage, we're not proposing any fee variations to the scale fee, which again is set by PSAA. I'll pause there. I've covered all the sort of the major points that I wanted to bring to this committee's attention, but I'm happy to pause there for any questions.
Okay, thank you, Paris. I'll probably just make a couple of remarks and then maybe ask you the first question. I'm sure there'll be a number of others from the rest of the committee. I think it's clear to everybody in the committee and indeed to the council how important the issues are that we're talking about here. You know, having 2 years of disclaimed accounts and absent a miracle, another set of disclaimed accounts coming is not the position that any of us would want to be in. So I think we all take the situation that we're in, the work you're doing together with the officers incredibly seriously. I think the report you've presented is very clear and very helpful. I'm sure the previous two were as well, but I didn't read them with quite the sort of forensic care that I've read this one, seeing as I'm sitting up here as opposed to in the back row as I was before. I do think it's very helpful in terms of the way you've set out the significant risks, the improvement recommendations, and the responses you've had from management over the past 2 or 3 years. And I guess the big question, and maybe it's premature now, but the big question I guess I would have, and I know other colleagues would have, is based on your work to date, your first impressions, what's your assessment of the progress that has been made or is being made to address the various issues that you've just outlined and that are outlined in more detail in the report, and that that we're carrying forward from prior periods?
No, that's a good question. I mean, some of these, the improvement recommendations, I don't know the exact number, but there's circa sort of 15. So there's quite a lot in there. Some of those sorts of things can only be done at the year end, and we'll only know about the year end. Some of them are things that will be done improving sort of those daily or sort of monthly processes. What I would say, as part of our risk assessment work, we haven't come into any issues, so we've been able to get through the majority of that. The sort of the high priority ones are really the major things that are going to unlock us being able to move from getting through only a fraction of the audit through to full completion. And those ones around, say, the fixed asset register, I would say are the really big ones. And I know that management have been putting work into that alongside producing the accounts for the year. I think it's important to be fair and balanced in that actually we finished our audit sort of January, February time. And within sort of 2 months, officers are now sort of busy finalizing their year-end accounts as well. So there's a limited amount of time between the time we reported and now to fully implement these. I mean, I would probably ask management to provide a view themselves in terms of it. But from my perspective, there's been a lot of energy and willingness to make these improvements. And, it's premature for me to say whether or not they have or have not just yet.
With apologies for putting words in your mouth, you're encouraged by what you've seen and heard, and there are no sort of urgent red flags that are being waved at you.
So we raised the red flag already. I think that's fair to say, and it's right also to allow management the time to go ahead and implement these. It won't be long until we actually receive the set of accounts and start to do some of those initial views. I don't know when the next audit committee date is, but I'd have a better view at that point than say in April, where we've only been able to do some of the risk assessment work.
We'll ask the officers the same question in a few minutes' time, and I'll hand it over to colleagues to ask you some further questions now, and we'll wait and see what happens come the next audit committee. Questions from members? Councillor Grint.
Thank you very much, Chairman. I've got a couple of quick questions. Firstly, you're already stating at the outset of this audit that you're expecting to disclaim an opinion on this year's accounts. What year do you expect that position to change? Will it change next year, the year after? When will you be able to complete an audit of council's account?
Yes, it's an important question, a little bit of a tricky question, but if I can sort of take us on that journey. The first step has to be to audit the closing balances and the transactions in year. And that actually provides a lot of assurance. And if we do that for a couple of years, the only thing for where there will be uncertainty is over the profile of the reserves or the classification of reserves. Now, that seems like a sort of a small thing to say, but the reality is your general reserve, your usable reserve, is probably the most important figure in these accounts. And that figure is sort of a culmination, a build-up of all the transactions that would have gone through in those periods not subject to audit. There has been guidance issued, sort of a LARIG, in terms of how auditors may be able to regain assurance on those periods, but we wouldn't be able to do that with Sevenoaks until we've gone through that until we've gone through, say, 1 or 2 years of being able to audit closing balances and transactions in between. So where are we now, 25, 26? If there is an opportunity in 25, 26 and we complete that, I mean, that still is a big step given the improvement recommendations that there are here. But if that is possible before the backstop, and then say we have another year, a good year of audit, then there is then the option, for providing there's capacity, to then do that reflective work on those previous years to unlock the reserves to move back to a true and fair. If we do those sort of 2 or 3 good years of audit, closing balances, transactions in year, the disclaimer's wording will change such that it's a disclaimer and it will precisely talk just about the split of reserves. That would be a really important marker for success, I think, particularly in light of local government reorganisation from the 1st of April, that the successor organisation will inherit assets and liabilities, which it can say, I'm assured about these. What then about the reserves, I suppose, is a slightly different matter. It's a bit more tricky to unlock that, but I think the hallmark of success has to be by the time local government reorganisation comes in on the 1st of April, that new organisation knows the assets and liabilities that inherit and has some assurance that the transactions going through on a year-by-year basis, those are correct as well. And I think that would set that new organisation up with an ability to have some success. If not, I think it will struggle. I don't know if that fully answers your questions, but it might take 2 or 3 years, and then you'd have to do an extra piece of work in an already quite condensed period of time.
Other question, which is unrelated, which is when you listed your 4 significant areas of risk, not one of them, as far as I can see, relates to the, if you like, the core business of the district council. I've got them right. That one was about management override, but that applies to all entities. One is about the pension fund, which again applies to all entities. Everybody has a pension fund, and the figures in that are usually so significant, override many other activities. Third one was about fixed assets, value of land and buildings, and the fourth one was that implementation of IFRS 16. So as far as I can see, none of that is actually related to the core business, as I see it, of the district council. I wanted you to comment on that.
Yeah, it's an interesting observation. I suppose the perspective that we take is we, as external auditors, look at the accounts and we go through that risk assessment under the auditing standards. And effectively, it's the really big figures is where there's the biggest risk of there being significant risk. In terms of the underlying business of the council, which you would recognise as a member, those elements are still subject to testing through our sort of I&E testing, so the testing of income, grants and so forth, the expenditure, what it spends on payroll, all those things are still subject to audit procedures. They're just not at that sort of significant risk category because they're not really got that judgmental aspect. There's not the estimates. Those are the things that typically, for us as external auditors, give rise to significant risk. But I want to assure you that the underlying business of the council, the income, the expense, those will still be subject to audit. Then we also have our value for money work, which is probably closer to perhaps what you're thinking in terms of us looking at the business arrangements of the council and having a view whether or not they are sustainable from a financial point of view. We will look at governance arrangements, and we'll also look at the 3 E's, so whether it's delivering economy, efficiency and effectiveness. And then it's through that reporting perhaps that we get to see the underlying business of the council and looking at the big capital projects and the things that you would recognise as members.
Councillor Skinner.
Thank you very much, Chair. I've got 2 or 3 little questions, but I want to go back on the disclaimer just so that we're absolutely clear on that, if that's possible. And I'd like to start by echoing what you were saying about the clarity of the reports and so on. I find it really helpful, so many thanks for that. I just want to be absolutely clear in my own mind and for the committee. So the reason that the accounts, that you're disclaiming the accounts now are for 2 reasons, as I understand it. 1, because of the opening balances, and 2, because you weren't able to secure assurance on in-year transactions and the closing balance. And that's the situation.
Yeah, precisely. And it's a bit tricky in terms of the wording, and that's why we try to use our audit findings to convey that message. But it's fair to say that there are some disclaimers out there where the audit has done closing balances and transactions in year, still a disclaimer. Sevenoaks isn't quite yet in that position, and I think that's the success we need to get to.
Thank you, and that was exactly the point. So I think for us, what we really need to be concerned about are the in-year transactions and the closing balances. As is clear, we've inherited the problems with the opening balances, and that's going to take time to work through, as you've very helpfully explained. So that's really useful, and I think that having the whole committee clear about that, there are two reasons for the disclaimer, two broad sets of reasons for the disclaimer, I think is helpful. So thank you. I've got some other small questions if I can go on to those. The first is on page 12 of the notes, and this is where MHCLG has asked for a report by the 31st of July, and I believe this covers all councils. Council's ability to both maintain and, where necessary, build assurance, having a clear and agreed project plan, and so on. Now, I note that the next audit committee is on the 21st of May, and the one subsequent to that is in November. So my question is, will the audit committee only be able to understand any judgment there when it comes to the 20th of November, when it comes to November?
Sorry, just to
Please
jump in. So I'm told the next audit committee is on the 8th of July.
Okay. Okay.
The website says.
That's enormously helpful.
Thank you.
Thank you. That answers my question. So
Yeah, sorry, just to explain, the calendar of meetings is still provisional until it's agreed at annual council. Once this is found out, I think they put another audit committee in July.
If you recall last, I think dates were mentioned, the committee asked for the June meeting to be put back a bit because there's a big gap between then and November, hence it was put back to July. So you can then comment on the draft accounts being complete by the end of June, etc. That was the purpose for that.
That's really helpful. Thank you very much. The next question was just on the MRP calculation. That's page 29, and I wanted just to be confident that every time when we're thinking about big capital projects coming down the line, every time that we are considering not applying the MRP, we check with our auditors that that's appropriate. I know that it's a very contentious area, but is that the process so that we know? So if there were a big capital project coming, would we always be checking with the auditors? Because I note that we've run into difficulties on this as recorded here.
All I can say on that, I think we do have discussion with the auditors about big capital schemes forthcoming in general terms. That's what I can mention on that.
Sorry?
We do have discussion with the auditors on large capital schemes on the horizon.
Yeah.
Discuss various things on that.
Yeah, and that would include whether or not MRP was.
It may, I can't, it scheme, very scheme for scheme.
Okay. And my last point is on the fixed asset register. So this is page 35, and management comments that the fixed assets register has been reconciled due to significant work, and a list of required adjustments has been prepared. I note that the auditors will be looking at that and checking that that's okay. I want to know how significant the required adjustments would be. I mean, first of all, congratulations on getting it sorted, but then secondly, how significant are the required adjustments?
So yes, as mentioned, significant work has happened on this reconciliation, and we've identified the differences. Some differences are due to errors on the asset register, and some are on the ledger. So it's difficult to give a kind of net position, but it's our intention to run through those with the auditors and agree the adjustments to make sure that they're happy with what we're proposing on that. But it was only down to, I think, around half a dozen assets that had issues with them.
So at this stage, without holding to it, you're not concerned?
No, I'm very pleased with the progress that we've made, and as I say,
thank you. Yeah, no, congratulations on that. That's obviously a very important piece of work. Thank you.
Councillor Robinson.
Thank you, Chair. I wanted to add my congratulations because I've been on audit since I joined the council, and it's come round like a merry-go-round every time. So really good that that's now cleared. So can I then pass this back to Paris? Is this then because the fixed asset register is such an important thing, and then it leads into the capital financing requirement. As I understand, it's hard to get that right until you've got the FAR right. So is this something you're going to be testing, and then you can come back to us and say, it's all hunky-dory and tickety-boo, and we can open the champagne and it's done?
Yes, we will test it. I can't promise what we will say about it. We will certainly work with management through that, but I echo that it's pleasing to hear that it's been done, and my team, we can get on and audit that and provide a large amount of assurance back to this council, because I think the assets are quite a sizable part of the council, really. So.
Yeah, I was going to say that
I'll
there
make it
is
Prosecco.
no budget for champagne, Councillor Robinson. That will have to be self-funded, I'm afraid.
Yeah, as you say, 115 million. So it's really pleasing news. And I mean, I just want to sit and enjoy the fact that it's ready for testing, and what comes next is then something comes next. I have some funny questions. You know, I always have funny questions. So I plunged down the rabbit hole of what materiality is, because it was a word I didn't know, and I think I've understood now what it means. And I've also, because this is what I've read, the Grant Thornton audit plans for our 3 neighbouring borough councils with whom we are likely, but because, well, Tunbridge and Morning was just last night, and then there's Tunbridge Wells, and then there's Maidstone. And I'm not asking you to compare the children in the classroom to say who's done their homework better than others, but I did notice that our planning materiality is 2%, and theirs is all set at 2.5%, which doesn't sound like a big difference. And I just wanted to check with you that, does that matter? Does that difference matter?
Well, I am the auditor of Tunbridge Wells, so I have 2 different views on that. So that percentage that we apply is a matter of judgment, and there are certain factors that go into that. That one is the complexity of the accounts themselves, and you know, here at Sevenoaks there's a group arrangement with subsidiaries and quite large transactions in those. So some of those are the factors from just a sort of inherent risk that forms that judgment. Our firm sets a sort of a range of permissible materiality, so you can't go completely rogue and sort of go sort of 10%, but the top whack is 2.5%, and the judgment that we will take is we'll start at the top and then look for reasons or consider reasons to move that down. I've kept Sevenoaks at 2%, and as I said, one of those key judgments was the complexity of the accounts. It's actually not as straightforward as maybe some of the others that you've seen, certainly Tunbridge Wells, in terms of making that judgment. The performance materiality is really the one that where the actual experience of the audit comes into play. And you know, clearly the experience has been a little bit challenging here at Sevenoaks, and I think I might be at 60 or 65%. I can't remember the exact figure.
So you set it at 60 for us, but all the other, well, Tunbridge Wells is mentioned at 75, which is the upper end of the envelope, as I understand.
Yeah, that will give you a,
So,
yeah, 75 is the top.
So
So
that
that will give
was-
you a feeling for the experience, and that's about internal controls and, you know, whether or not you've identified lots of misstatements in the previous year. So a lower performance materiality basically just means we have to test more. So.
Thank you. That's really interesting, and I enjoyed learning it, and hopefully somebody else doesn't mind me asking. I think I had, yes, whilst we're on the subject, as I said, I don't want you to compare all the children in your class, but it's clear that we have a lot of issues in common with the others, the pension statement, the IFRS. I mean, everybody knew coming in that IFRS 16 is not really set up for public authorities, is it? But we have to do it. Is there something, whilst you're here, that you think is unique to us, that there's something that we should know? Because I ask because, in a sense, and I know you haven't done this, and I wondered if you could, is if we could have a one-pager, literally, that said, here is your report, it's lots of pages, but here are the 3 things, maybe between 3 and 5 things that we feel the audit committee really has to understand in ordinary everyday language. Are there any things like that you can tell us that are unique to our position so that we know that's what we need to work on, assuming that LGI is coming and we want to be in line with the others and all marching together into the beautiful new sunset? Thank you.
Yes, if I can continue to simplify these and make them as clear for members, then I think that's a valiant sort of thing to do. I would say our best attempt is probably page 4, I think it's page 14, which is sort of the introduction and headlines. And it's basically, what are your significant risks? What is our materiality? BFM risk assessment would normally be on there, but it's indicative at this stage. That's our best way of approaching it. I accept the point that actually, if you were to look at most councils, it would mirror this. And that's because the financial statements themselves are quite similar from a risk assessment point of view. There'll be the odd significant risk that is different here or there, but those management overrider controls, pensions, PPE, those will be standard risks across all of them. You might start to find with the introduction of indexation on PPE that might slightly change from year to year, depending on how many assets are subject to that. But ultimately, they're sort of the default almost, because they're such big figures. And, you know, if we were to ever be subject to review and any regulator looked at us and they said, well, why is that not a significant risk? We'd be in a tricky position. So what I would say is the work below that level can be a little bit more specific to the nature. And if we find any errors through that work, we'll report them in here. If we were to detail all of the work that we're going to do, it would be an impossible document. But I can take that one away in terms of how we can create something even sharper for members. But I think the introduction and headlines is probably your best bet at this stage. Yeah.
I just think it'd be so helpful if we could have this. Well, I mean, sadly or happily, I'm related to an awful lot of lawyers. And, you know, for most of them, if they work in the commercial sector, the client doesn't want to know the law. They just want to know what they need to know. This is where you're legal, this is where you're illegal, and this is the grey area, come and talk to me. That kind of one-page summary, because, and some of us are new members, and it's really hard to get up to speed. So if it's something that could be done, I don't know, Chair, through you, that could be considered. But it'd be written by our auditor as a one-page, these are the 3 things you need to remember to take home, or read pages 56, 42 and 9 kind of thing. That would really help us when we get down to reading. Thank you.
I think it's a laudable aspiration. I guess I'm sort of sympathetic to Paris that you know, the report, I'm sure, is a standard form that Grant Thornton in its wisdom has developed over time, and they have to tell us everything. They'd be doing us a disservice if they just try and boil it all down to 3 things on one page. So
yeah, I mean, there is some legal things, ethical duties for which we have to report. And I suppose if we were to produce any, it would have to be part of the audit, not as a separate document. The risk being, you know, those charged with governance yourselves are not aware of everything that you should know and would get in quite a lot of trouble if that was the case. So what we can potentially do is for the future ones, particularly the audit findings report that's coming, what I can do is try and really tailor in something at the start that can help guide the reading of it. And of course, we come here to present, and I will tell you the things that I think are of most importance, but it would have to still be part of quite a dense document just from a legal, ethical point of view.
Councillor Lindop.
Thank you, Chair. Yes, I'd just like to ask Paris, you said that you do the audit for Tunbridge Wells as well. Is there any other councils you do? How many councils do you do the audit for?
Personally, or as part of Grant Thornton? As
if you got the answer to both, that's great.
Across my NHS and local government client base, I think I have 14, and that might include 5 pension funds, including Kent Pension Fund. So weirdly, I'll be writing to myself, which is interesting. So yeah, that's my portfolio. Grant Thornton, we have, I don't know, between sort of 30% of the local government market, so quite a fair chunk. And most importantly, we do all the clients across Kent. And what that gives us is that sort of lens to look at local government from sort of a pan-Kent. So we have somebody working on that as part of our value for money to give a pan-Kent view. There'll be sort of a one-pager in terms of our assessment, our understanding of it. But then there'll be sort of local things, what's going on at Sevenoaks, for example, around local government reorganisation. And we'll be particularly interested in sort of governance and ensuring that sort of the business as usual maintains and that decisions of the council remain at best value. Those are the things that we will be aware of and thinking about, and we'll be sort of keeping an eye on that and reporting back as part of our VFM work.
Okay, that's great. Which leads me on to my second question. The council's assets are over £500 million here, apparently. So how does that compare with the other councils in Kent? Would you know, is it a big deal? Is it somewhere in the middle?
I think that it's probably a typo from mine. I don't think it's £500 million. It's probably more closer to 100 million. But so if it's on the report, apologies for that. I think that's probably.
Oh, because it says the value of the council's assets is over £500 million. And I looked at that and thought, it's a lot. So that's a big typo.
I think so. I'll have to double check that, but I think it's still a big figure. I think it's still around 100 million. So in the context of gross revenue expenditure, it's still sizable for this council, but I don't think the £500 million, I think that is a typo. So apologies for that. I'll get that rectified for the final audit plan that we have to bring. Yeah.
Okay, great. Yeah, I'll be interested to know what the figure is. Yeah, thank you. Cheers.
And your second question about how does it compare, I think.
A lot less now. It's not £500 million, I suppose, you know.
Yes,
Yeah.
I think the balance sheets of all of the districts vary in sort of size, but obviously the largest would be Kent County Council itself, which would hold the schools, for example, all the maintained schools is probably what they bring onto the balance sheet is probably the sort of the biggest source of assets across Kent. But if you'd want, I can sort of go back because we do have that information to hand in terms of the totality of assets across Kent.
Yeah, if it doesn't take 5 minutes just to like whack it out onto a spreadsheet, so that'd be lovely. Thank you very much, Paris. Yeah.
Thank you, Chair. Paris, one of the things I'm probably most nervous about in terms of being able to complete the accounts is the valuation of lands and building. I've noticed the change in the CIPFA code of using indices across the board. My experience of indices are they work really well for large volume, pretty generic type assets, but public sector assets are quite unique. Do these type of indices exist across the board that can be applied? And also, depending on who you use as the indice provider, you can get material differences quite quickly. Do the council and yourselves align on who's a permissible body to issue the indices? Or is there kind of free rein that you have your own specialists and the council have their own?
No, it's a good question. My understanding is that I think the assets for the year to come are going to be a full valuation, but I could be, no, that's not the case. Okay. So there's been some work around the indexation. I mean, we've had a lot of training internally around that. I see your nervousness, but I think that the approach that we're not looking to sort of look at material, like look at the differences necessarily. Rather, we sort of take a view as to whether or not the index itself is reasonable. And if that's the case, then the outcome is then reasonable itself. So I think it could be a good way of reducing the amount of work, but still 20% of the asset base will still be subject to a revaluation every year. So we still have that same significant risk work to do, but then it's about the indexation. Now, the complexity with Sevenoaks is we don't really have an assurance over sort of the base figures. So it's only when that goes through that 20% that the indexation will actually, we would have assurance over that, if that makes sense. So if you're indexing something for which we've never sort of audited that valuation in the first place, that's really tricky for us. So over time, we will rebuild our assurance by still doing those valuations, but an indexation on a figure that we never had assurance on before, we're unlikely to do large amounts of work on that ourselves. We might look at the indexation, but ultimately, until we get that full valuation sort of origin, that's really what's going to drive us. But I can come back in terms of the work that we as a firm are doing across the index, because we're looking at it as a firm base. We've got our own auditors expert in-house that will be doing this assessment for us for our local government clients.
Just to come back on that, if we can't place reliance on the indices because you haven't got opening balance or opening valuation, if that's going to take 5 years to get through the entire population, is that going to result in disclaimers and qualification until we've gone through a 5 year, never mind if we've had 2 years of clean audit work?
Yeah, so I mean, it depends on the size of that uncertainty in terms of those assets. But yeah, it takes some time for the PPE cycle to work its way through. There is the option for us to go back and sort of audit those valuation in 23, 24, so we can start to do some targeted work if that makes sense for us. So that could be some of the areas that we would look at. What I would say is, in the first instance, we are focusing on trying to get through sort of the business as usual stuff in terms of the accounts. And then if we start to think about that PPE balance, we might say, well, actually, we can look at the valuation that was given back in, say, 23, 24, and then we're happy with the indexation there afterwards. But these things are sort of within a time limited period. We have to sort of prioritize those things that has the biggest impact.
Great, thank you. That makes sense. Just going back to one of the things you said earlier about writing to yourself in your Kent County Pension Fund hat, are you conflicted in any way that you're getting assurance from yourself that potentially you have to prioritise Kent County Pension Fund at the detriment of the council? Is there a conflict, or is that kind of completely permissible within external audit?
Yeah, it's entirely permissible. I mean, often the auditor of the administrative authority, for example, Kent County Council, the auditor of that would also be the auditor of Kent Pension Fund. That's always been quite commonplace. I hear what you're saying in terms of the conflict. Do we have the phasing? So phase 1 and phase 2 clients. Kent Pension Fund is phase 1, just to ensure that it unlocks those IS 19 assurances for all of Kent, and that generally goes well as an audit, to be fair. So that there's no sort of conflict in terms of me sort of providing those assurances to myself.
Any other questions? No. Okay. In that case, we have to. The recommendation to Audit Committee is that the appendix be noted. Everyone happy with that? Yep. Super. Thank you very much. Right, Paris. Thank you. Moving on to item 6, statement of accounts 25-26 progress update. Jessica Booth.
Thank you, Chair. Yes, so this report sets out a brief update, much of which I think Paris has covered in talking about the audit plan, but it sets out the background to how we have reached the point that we've reached. We are obviously very keen to address the significant weakness highlighted in the audit findings report, and this report sort of sets out some of the progress that we've made and some of the actions that we've taken to address those issues. These include the additional resource of the accountancy manager, who commenced with us in December. We have a further post for a financial accountant, which was approved in the recent budget process. We actually have an interview scheduled for that next week. So we're hoping to be able to recruit to that. We've engaged some external support for the collection fund through LG Futures, which will free up some capacity within the team. And as already mentioned, progress has been made with the fixed asset reconciliation to identify those assets with differences between the ledger and the fixed asset register. In addition, the finance team have made good progress in clearing historic accruals and preparing for the end of the financial year, and are currently very busy working on outturn and making sure all the accruals are processed correctly. I think that's all my initial comments, but I'm happy to take any specific questions. Thank you, Chair.
Thank you. Thanks for the paper. I thought it was very clear and concise. Thanks for the table on the top of page 72, which shows that, whilst we shouldn't take our challenging situation for granted, sad to say we are in company with a lot of other councils across the country, which I guess just puts a lot of stress on Grant Thornton and its team's ability to get through all those audits, catch all those audits up. I thought the situation that you described in terms of the progress on fixed assets and the collection fund was pretty encouraging. So it sounds as if we're heading in the right direction, albeit as Paris said, he'll update us in much more detail when he comes back to our next meeting in July. I didn't have any particular questions that you haven't already answered, Jess, so I'll move on to the rest of the committee. Councillor Robinson.
Thank you, Chair. It's just a quick question, and completely sympathise with your point on paragraph 13 about the timings and not being ideal. Again, we seem to be stuck in this rut of the timings are really hard. Is there anything any of us can do other than asking annoying questions or not asking annoying questions? Is there anything you feel that could still be done to help you that isn't yet being done? Because it is hard every time. And when the report comes out later, it's like, yeah, well, we were trying to juggle too much at the same time. So do you have any requests?
I don't think any requests. I think a lot of it is about the early engagement we've had, and as outlined, the planning phase of the audit is nearly complete. We're already in sort of initial information gathering for testing of some elements, and in the middle of June we'll be again engaging with Grant Thornton to look at getting a lot of the sample information and that kind of thing prepared. And a lot of that is about bringing that work forward. So seeing what samples we can get ahead of, as Paris says, Grant Thornton going off to concentrate on NHS, seeing what work we can be doing. And so, for example, Revs and Bens are struggling to sort of deal with things at this point in time because they're processing everything for year end like we are, but they know they'll have capacity in May, say, to prepare the sample information so that when Grant Thornton come in June, then we've got that there. So, and some of it, I think Paris mentioned the kind of February audit findings report, and right, we're into March, April. What have you done about it all? And obviously the sort of targeted, the official deadlines are coming forward anyway, but also Grant Thornton are trying to bring that further forward and meet that earlier deadline of November. And, some of it, this audit process used to be completed a lot earlier, a lot quicker. You'd be looking at it over the summer and then we'd kick off with the budget process. So it is more intense. There's a lot more involved in it, partly because of the situation we're in, partly, I think, as Paris would say, because of changes in the requirements of them in terms of the auditing process. But, I think it is all about moving in the right direction. And, we have got additional resources. Obviously, it's subject to being able to recruit somebody or, getting those external resources in. But yeah, I think, we're in a better position going forward. And yeah, hope that answers your question. Thank you.
Councillor Skinner.
Thank you, Chair. I want to refer to paragraph 5. So paragraph 5 quotes the audit findings, and it says the council must urgently strengthen its close down and financial reporting arrangements. by addressing skills and capacity gaps within the finance team. Council must address the significant weakness. And then the original text goes on to say, in advance of preparing its 25-26 financial statements in March 26, failure to do so would require us to consider using our auditor's powers, including issuing a statutory recommendation. So I've got two questions. The first is, why was the sentence or the clause in advance of preparing its 25-26 financial statements in March 2026 omitted? And secondly, can I have confirmation from the auditors that they have confidence and therefore will not be issuing a statutory recommendation given the time that's passed?
If I may commence, apologies, it was just copying it from something that had kind of taken snapshots. So apologies, I should have put that in full. It wasn't intentional. Sort of in terms of omitting that, yeah, I don't know if Paris wants to add at that point.
So I think the first thing is that a trigger for a stat rec can happen at any time. It's not like when we normally would sort of the normal reporting cycle, there could be any trigger that could mean that we would need to consider that. I think it's fair to say that from the conversations that we've had so far and the progress verbally that we've heard, that's encouraging signs that action is being taken and the council sees that as important to implement. So there hasn't been recourse at this stage to sort of move forward on anything like that. But I'm not saying it couldn't happen. It's just to say that you know, it's something that we need to keep in our minds. We always need to consider our auditors' powers. But it's certainly, and the conversations that I had with Pav, with Adrian, it's certainly not something that we want to go down. And actually the work through the finance team, Jess and so forth, if we're seeing, you know, substantial improvement, that is essentially what the key recommendations about. But can confirm we've had no further conversations about stat recs internally at Grant Thornton.
So that's great news, and I think that that's worth highlighting. That the key recommendations from last year, or when these came out, indicated a significant concern. You wouldn't have put this in, and you wouldn't have put the timetable in, but you are now more confident, clearly, than you were when this was originally drafted, because you're not having to move towards a statutory recommendation. I accept that you can at any time with any council come up with a statutory recommendation if that's required. But I'm taking this as good news. Am I right to do so?
Yes, correct. I think we're seeing what we need to see at this stage. And therefore, I think, you know, the key recommendation still stands. There's still work to do, but I'm assured that work is happening. I'm yet to see the fruits of that, and quite right, there needs to be some time for that to go through. But if nothing was happening, and you know, sort of officers couldn't talk to the improvement recommendations and what they're doing about them, then that would be a cause for concern. So it's not to be alarmist or anything like that. I rather steer clear of that, because I think the reality is we want to push towards improvement necessarily, rather than some sort of you know, if this then this. I you know, really want to focus on the improvements. I mean, it's quite tricky, I think, for officers, you know, multiple years outstanding. There's a lot to do in a relatively short piece of time. So yeah, that's my fair assessment.
No, okay, in that case, two more from me. One to Paris, and then one to Jess. So Paris, you may have heard that Adrian is leaving us. He assures me it's nothing to do with my appointment, but I couldn't see him. He may have had his fingers crossed at the time. that causes me a bit of concern, frankly. Does it raise particular concerns on your part, or maybe put another way, are there things that you would advise us to think about or to interrogate between now and when he goes?
Putting me on the spot. I only found out today as well, so a little bit of a shock for me. But I mean, Adrian's been a while, and he's got a lot of experience. I mean, these are relatively choppy water times for Sevenoaks within the accounts. I think outside of the accounts, actually, our value for money work and those sorts of things, financial sustainability, some of the things, and we're talking a lot about the accounts, and yes, there's things to do, but outside of the accounts, things are relatively good for Sevenoaks in comparison to other councils. So yes, there's a thing to fix in terms of technically the production of the accounts and so forth, and there's work to do there. But beyond that, if we're thinking wider across the council, this isn't a council for which I have sort of massive concerns about. It doesn't have a financial sustainability key issues, whereas other councils are in. So given that we've spent sort of 45 minutes speaking about the challenges in terms of the accounts, that can sort of paint a certain picture. But I think Adrian leaves a strong legacy in terms of the council and its financial position that somebody else will then inherit. But yes, there's work to do on the accounts. But I think the wider piece is in a good position.
Adrian, is there anything you want to say about your departure and big shoes to be filled to aid our thinking about this subject going forward?
Yeah, firstly, my fingers weren't crossed. So, it was nothing to do with you, honest. On that, I think members will receive a report later this month at Cabinet and Council on the proposal for placing me in Section 151 post. That'll be a new person in that post, and the advert for that will go out as soon as the council agree that process. In the interim, Jess has agreed to be the interim Section 151. I'll be staying on a part-time basis until we get a new person in place to assist Jess on the finance side. I will lose my other responsibilities during that time. I'll be solely on the finance side. I'll be focused then.
It's helpful. That's reassuring. Thank you. Jess, just a final comment from me. I mean, I think I'm reassured, and that's the sense I get from the rest of the committee as well, about the progress that's been made in a number of areas around fixed assets, the collection fund, etc. It sounds as if you're making really good progress and you've got clear plans in place. I guess my request to you would be, if there's if you do hit any bumps along the road, you let the committee know as soon as possible. And if you need any further support, I think it's a really good question from Councillor Robinson. If you need any support in dealing with bumps in the road, don't hesitate to tell us so that we can help your case. But hopefully I speak for everybody in saying that. Okay, so our request here, or the recommendation to Audit Committee, is that the report be noted. Everyone happy with that? Super, thank you. Paris, obviously you're welcome to stay, but don't feel obliged on our account. I know it's a busy week.
I'll stay for a couple of items I want to stay for, but I might at some point.
If you need to go, then go. Right, moving to agenda item 7, internal audit progress report. Jennifer.
Thank you, Chair. So this is my usual update report, just giving the status of where we are on progressing against the audit plan for 25-26. You'll see in the table, paragraph 4, that actually for the first time in quite a few years, we've actually at least completed all of, not completed, sorry, that would be a really bold statement. We've at least started all of the work for current audit plan, which is a massive progress, like I say, for the position that we've been in over the last, even before I started in my role as well. So really good progress. So although there haven't been any, or we've not reported any completed audits, it is still really good progress across those. And actually the 2 audits that are listed as being a draft report are ready for the final report to be issued as well. So they are now complete. So the outcomes, obviously we haven't reported any outcomes, but our follow-ups there, outcomes of those are reported. We do have the 2 follow-ups that have been deferred, the 1 medium and 1 high priority. The high priority action does refer to the procurement audit, and that recommendation is around finding ways to report and monitor any disaggregation of spend. The reason this has been delayed so much is because actually the way that Aggresso gives the information, it's really difficult to then analyse that in a way that's useful. So there has been quite a lot of work done on that. It just hasn't been completed. I know that it's obviously in amongst all the work that the finance team have been doing, this is also something that they've taken on to try and get to the bottom of. It's also part of our Q4 testing, the work programme for our Q4 testing for the accounts payable continuous assurance work as well. So there's a little bit of work going on even within audit to see if we can identify a way that it can be done. But just to assure you that this, I know obviously the procurement audit has been a focus of the audit committee, and so it's just to assure you that actually it's not that this recommendation has been left. There has been active work going on it the whole time, and we're trying to find a way that because it is important and it'd be a really valuable piece of work that can be a control that can be added in ongoing once we've figured out how to do it. And then moving on to our performance, obviously what I would like to say is that we have had some successful recruitment exercises and the internal promotion of our career grade auditor to senior auditor. So that means we only currently have 1 vacancy left in the team. That vacancy is due to be advertised very shortly. So obviously resourcing within the team is now much improved. What's not in the report, as obviously you guys will all be aware of, is that I will be leaving shortly. And so there are there's plans ongoing at the moment to replace me. And at the back there we have Jo, who's our current assistant audit manager, assistant audit manager. She will be stepping up in the interim, so she's come here to shadow and see what happens at an audit committee. So please, she's fantastic. She's very capable, so please be assured that the team will be left in very good hands. The other thing I wanted to raise as well is I wanted to congratulate our senior auditor, who's just recently got his certified internal auditor designation as well as part of his apprenticeship, which is fantastic. And then our performance indicators, there are the usual kind of issues there. Obviously still some improvements around the percentage of budgeted days to complete projects. That is assisted by some of the work being done externally, but there are improvements within the team as well. But we are still working on the timeliness of issuing our draft reports. And again, I think a lot of that is actually us needing to be better at predicting how long audits are going to take. What we're starting to find quite a bit now actually is, although we might be giving ourselves more time, it's the availability of officers that is quite often pushing back our timelines now. So we're looking at ways that we can look at this, that as well as this indicator as well, just so that we're not penalising ourselves when we're doing everything we can. So yes, Chair, happy to take any questions.
Right, committee. Mr. Councillor Grint.
Thank you very much, Chairman. This report is under agenda item 7, is headed up Dartford and Sevenoaks Audit Partnership. So we have a joint partnership dealing with audit across the 2 councils. I wondered, in the run-up to local government reorganisation. What are the plans for the future of that joint partnership?
Chairman, if I can take that. I think with Jen's imminent departure, that led to a discussion between parties of both Sevenoaks and Dartford, and it was felt that it would be beneficial to keep the partnership going. Obviously, Jen and Joe know both authorities really well, and therefore both councils will benefit from having Joe and the team having a focus on the two councils. If Sevenoaks went a different way and Dartford went a different way, there'll be different people involved who, shall we say, may not have the best interest or the main focus on Sevenoaks District Council as their main day-to-day, because they've been employed by someone else and would have a history of working with someone else. So therefore, until we know anything more, the intention is the partnership stays as it's stronger, having individuals that know and work for those two councils directly rather than as a third party from someone else.
And just a follow up to that question, presumably you, or not you, a watching brief will be kept on the makeup of the internal audit function for Sevenoaks District Council as we get closer to LGR.
Absolutely, Chairman, as it will with all services that are shared as well.
That's just gonna.
Yeah, just to say how pleased I am to see that the audit actions fully implemented within agreed timescales has gone up to 89%, something I've banged on in the past. And so I think I should say I'm very pleased to see that. So thank you very much.
We shouldn't have a favourite, but you all know who mine is. Councillor Robinson.
Thank you, Chair. So I wanted to start by saying congratulations to all your team, to the people who you've been bringing up, your trainee, the people getting the qualifications. It's just lovely to hear that, and just want to say it's noted and congratulations. And I'm sure I speak for everyone here. It's a good sign of a good team, isn't it? That people are happy to stay and can progress. So, and I have some more congratulations in order. So I'm really delighted with some of these things on the list that you're doing. The cybersecurity one has, and you know, the various disaster recovery ones. I'm really grateful that you've put that near the top and that you're working on that. I might be stupid, but I don't understand what capital budget monitoring means. So if you could explain that, and then I have a couple of more questions after that. Just in a one-liner.
So basically it's the process for monitoring capital budget spend. So whereas last year, I think it was, we did a revenue budget monitoring audit, looking at revenue spend. This one is looking at capital spend and how that budget is monitored.
Thank you, because if I remember rightly from the budget recent FIAC meeting, we had a budget about 30 million, but we've managed to spend about 10. So that's something that you'll be looking at to say, is that, sorry, I'm throwing things out. Is that the kind of thing you're going to be doing, is saying, well, this is what we intended to do and this is what's actually happened? Is that the kind of thing?
So it will be looking at, or it is looking at rather, because that audit is underway. Just nodding for confirmation. So it's looking at, obviously, the processes that the council has in place for knowing what the budget is for spending against capital projects, and then tracking that spend and investigating any variances and understanding whether there's an underspend, why that is, or if there's an overspend, why that is, and how that's going to be addressed, essentially. So it's and how it's also not just how it's tracked, but also how it's reported and things as well. So it's the monitoring and reporting, essentially, of how that spend against the capital budgets is done.
That's going to be fantastically useful, I'm sure, to, you know, in terms of lessons learned and whatever, to the people who need to read it. Thank you. I think I've written, forgive me, woohoo against the temporary staff in waste and recycling. Because it's something that's come up regularly. Again, I turn to Councillor Grint as the chair of FIAC, but it's one that regularly comes up at FIAC as one of the budget overspends. So it's really good. Does that report, is that internal? Does it go to the portfolio holder? Will the précis of it or some aspect of it, will that go to Cleaner and Greener? Will it go to FIAC? Because this is a topic that comes up quite often there.
Thank you. So that piece of work is actually an advisory piece of work. So there's no assurance provided over it. It's purely advisory. So as per all of our reports, though, it's not automatically sent to the portfolio holder. However, obviously, as you're aware from the Audit Committee's terms of reference, if you want to refer something on to another committee, then that's something that is in with your gift to do. I'm absolutely sure that Adrian, as the director in charge for that area, will raise it with the portfolio holder if he feels it's necessary to do so.
Can I just jump in, Councillor Robinson? I completely agree with what Councillor Robinson has said. It is a recurring topic of interest. So if we can make that formal request that report goes to both FIAC and Cleaner and Greener for their for information.
It can go to portfolio holders, yes, Chair. Is that what you meant?
Oh, I think I meant the committees. Is that a problem?
We can circulate to any interested members, Chairman, if you want to, but yeah, we can do that to those members of those committees.
Yeah. If you could circulate to the members just for interest, that would be great. Thank you. Good, thank you.
Thank you, Chair. I have one final one. It's really, I just want clarification. So on the procurement thing, the trouble is you're trying to get into a system that isn't set up to help give you the kind of report that you want. Are you saying that? So Aggresso has information, but it's not delivering the goods that helps you address it. But you think you can fight the system well enough to get the information you want. And will that report come back to this committee when you finally wrestled it to the ground?
So on the second point, so we don't bring the reports when we do follow-ups. We don't bring that back to the committee, but obviously you'll see that it's been implemented because you'll see the figures and things, and obviously it will go back into the mixing pot as such for consideration for audit plans in future years. So it may well come back up then, and you'll be able to get assurance that way then.
Thank you very much. That's my last question. Thank you, Chair.
And then Steve.
Thanks, Chair. Jen, I think a couple of audit committees ago, you mentioned that there was going to be a triennial review of internal audit. Did that, or you were going to do a self-assessment? Did that happen?
So that's yes, that's ongoing. Well, it's about to start at the moment. So we've procured a validation from the Institute of Internal Auditors. We've engaged them. There's interviews booked in for several of the key officers and the chairman for the committee and for Dartford as well. So that work is ongoing, and so it should be reported at the July Audit Committee.
Yeah, thanks, Chairman. So question I had, it may be a bit of a strange one, but as a committee, I think we've got responsibility for ensuring there's the right level of sort of risk management oversight, ensuring we're comfortable with the processes. As an internal audit function, do you audit the risk processes? Because I know you sort of dual hat between the two roles. So is that something that occurs, or is there a reason not to do that?
So no, you'll see within the charter that's coming up to as the next item, I think. It's not appropriate for us to provide assurance over the risk management framework because, as you rightly say, I kind of have both those hats. So it is written into the charter that when the council feels they need that assurance over risk management, that they will need to procure that from an independent provider. Because it would be inappropriate for me to provide independent advice over something I have quite a bit of say in. So yeah.
So just to follow up, as a committee, are we comfortable? Do we have enough oversight of those risk processes and assurance that they are operating effectively on a daily basis? Is that something to consider?
It's almost certainly something to consider. It's not something that I have considered. So maybe we can have an offline conversation and reflect on how that might be done, and then circle back to officers to see what is practicable. Is that okay? All right, thank you. So you'll have seen in the questions I circulated, I had 2 or 3 observations on the KPIs. Jen has politely at great length told me that I'm mistaken. I guess the concern I've got, and we'll maybe pick it up a bit later on, is relation to F1. We're budgeting to take 10% more time for our work than, or if we're also trying, if we have a target that says that we can take more than 10% more time for our work than that we've initially budgeted. It seems to me that we're saying that we're going to struggle to get all the work done that's set out in the plan later on. So maybe I'll just circle back to that later on. And then I had a observation in the last meeting, which I hadn't followed up, around the presentation of these KPIs. And I thought it would be helpful if we could see the progression over time in the same way that we do in FIAC. And Jen said I should pick that up with Jo because she's leaving. She didn't actually say that. She put it in writing. Right, so recommendation to the Audit Committee is that we note the contents of the report. Is everyone happy to note it? Yes, super. All right, thank you very much. Moving swiftly on to agenda item 8, internal audit charter. Jen.
Thank you, Chair. So as most of you will remember, me having mentioned a few times that from 1st of April 2025, new global internal audit standards as applied to the UK public sector came into effect. And so this time last year, I brought a quite significantly rejigged audit charter. It was only that included that we needed to bring it back annually. However, obviously it's only been a year, so there's not been too many changes, and actually it works quite well. So there's not really been significant changes. This is essentially the same as last year. The biggest change is job titles. They're now reflective of what they have changed to during the year. Having said that, obviously with the news of Adrian departing and this audit charter making reference to audit, well, my role reporting to Adrian as the Section 151 officer, we will just need to have a look. So it probably needs to come back to the July Audit Committee just to make sure that all those considerations for independence that are currently in relation to finance work and the work that Adrian has responsibility for is then moved to the whoever, with the new structure and things. So it probably will need to come back for that. But as this stands at the moment, this is substantially unchanged from last year. It is just the job titles. So, but again, happy to take any questions.
Councillor Robinson.
Thank you, Chair. If nothing else comes out of all my chats and questions tonight, I beg, if I can almost put it metaphorically, on bended knees. This charter doesn't have a date at the bottom of it, and with my continental upbringing, documents in the public domain that don't have a date aren't legal. So it'd just be so nice if we could have a date somewhere on it. But more than that, could we have paragraph numbers? Because we now have neither paragraph numbers nor page numbers. And it's really hard to refer to things in a charter which sets out behaviour and rules and responsibility and changes. If you have to go to, well, the H page long and the 5th paragraph down and the 2nd dot. So forgive me for sounding operational, but it would be, if somebody could just do a global stick in paragraph numbers, that would be fantastic. Thank you. So to go to some of those paragraph, not numbers. No, some of the questions I'm going to ask later. So a strategic management team, is this a new expression? And can you tell me who that is? How often they meet? You say there's a strategic management team that sets the risk appetite for the council. Does that already exist, or is that something to come? And then I'll do another question, if I may, after that.
So yeah, strategic management team's been in operation for many, many years. That's basically the chief executive and directors.
So it's a bit like procurement assurance group. It's kind of the heads of the section and you. Is that right?
No, it's the chief executive and the
Chief
directors.
executive and the directors. Yeah. Okay. Sorry, misunderstanding. Thank you for that. Sorry, I didn't notice it earlier. The other question I have, well, it's more a comment really. The bottom of page 88, review the internal audit charter annually to consider changes affecting the council. I think we should put in local government reform there, because that might really affect the council, as well as the employment of a new head of audit, which I'm sad about. And do we mention external shocks there? I mean, there are some, I'm thinking of current war in the Middle East. Things can change, things can affect us quite deeply, sometimes from external shocks. I just wondered about that. But maybe I'm talking rubbish there. But it would be nice to see more on local government reorganisation as a seismic shift to come, built into the charter. If it's going to, of course, the government might decide not to go ahead. But, and finally, there's just one little word missing, because on page 89 it says provide a view where requested to senior management on the appointment and removal of the head of internal audit. But you are giving us a loss, and I'd just like to say that's the worst of all. But losing both Jen and Adrian is going to be hard for us all, I think. But we trust we'll get some good people. I'm just very sad about that. Sorry, I've been waffling, but really my question is, could we number the paragraphs? And thank you for telling me who strategic management team is. And reviewing the internal audit charter, I'd like to see more mention of local government reform. Thanks.
So just to come back on the local government reorganisation point, obviously there would as a result of local government reorganisation, there would be a new internal audit service that serves that unitary authority, and therefore they will have their own. They would one of the first things they will need to do is do their own charter then. So that will be covered, and obviously changing structure and things are covered as part of this. So I believe it is covered, but I take your point. But yeah, the new internal audit team, as part of the new authority, will need to put a brand new charter in place straight away before they have the purpose and the mandate to do their work.
Yeah, I had inferred that local government reorganisation would be picked up by the second bullet in changes to mandate and charter, significant reorganisation within the council. In terms of the date and the paragraphs, I think I completely agree. All of our sort of self-generated documents have paragraph numbers to ease navigation, so I think it would be a helpful amendment. Councillor Grint.
Well, I just wished to echo my views. I think it's very important that we get paragraph numbering in this report and also a date on the report. So I just want to support what Councillor Robinson said, and yourself, Chairman.
Object to that, those requested changes. The recommendation to Audit Committee is that sorry, do we have to vote on those suggested changes or not?
So as long as you suggest the recommendation, as you just said, and if the whole committee votes for it, that's fine. The majority do.
So the recommendation to the Audit Committee is subject to the inclusion of paragraph numbers and a date that the internal audit charter at Appendix A to the report be approved. Yep, everyone's happy with that. Thank you very much indeed. Speeding on to item 9, internal audit strategy. Jen again.
Thank you, Chair. So again, as part of the new global internal audit standards in the UK public sector, one of the requirements is that the team needs to have a strategy. This is the strategy that the committee approved last year. And on reviewing the strategic objectives and the proposed 27-28 position, I felt actually it was still relevant as it was. So what I've done is provided an update as to our progress in the covering report. Obviously, we're not there, and I don't think anybody would expect us to be there. This is a 3-year goal, after all, ambition. But we have made significant progress, and obviously those I've listed out each of the objectives in the covering report, showing where we are against each of them there. I think the most significant thing that come out of this is actually I realised we didn't have a PI to support the one of the objectives, so I've now included that in the next report, the audit plan. But other than that, you can see there that we have made progress. So again, Chair, happy to take any questions.
Questions? Councillor Robinson.
Thank you, Chair. So Jen, it was very exciting when you got the new audit management system up and running. Now that you've had a little bit of time, how's it going? Is it making life easier for everyone to know what they need to be doing and to be timely, so you don't have to go around banging on their desks saying, have you done it yet? Is it helping?
So I think you're referring there to the portal that I'd said we'd be able to. So we haven't got to the point of opening the portal up for everybody. So I think I'd said previously that what we would do is we would run a couple of follow-up exercises just with us using IdeaGen ourselves. And then once we knew how it worked and we'd kind of figured out all of the intricacies and the little foibles and things, then we'd be able to roll it out to the managers. So that will be the next stage. We're not quite there yet. We've done a couple of months. We're just about to complete our first whole quarter doing our follow-up work on IdeaGen. At that point, we'll take a bit of a review and decide whether this is now the right point to be able to roll it out or whether there's some more work that needs to be done. But it is looking positive, it is looking promising, it's providing better visibility of ability to track and things. So yeah, it's looking good.
The question was increased use of AI. You know, and it is one of those. Are you finding that? I mean, it's such an open thing, but it can be absolutely fabulous. How does that link into the new system that you've got, or is that something you're having to kind of shove in because it's now suddenly there?
Yes, so it's not part of the system that we have. As always with software, there's an upgrade. There's a significant upgrade, and I'm not sure whether it's AI is part of that or not, or even whether we're going to do that upgrade or not, whether it's right for us. But certainly we are using Copilot and things more. So it is something we're kind of doing as an add-on, and we're just reporting our findings from using AI in the audit management system. So not fully integrated yet.
Okay, thank you. I mean, I think I said the same thing last year, Jen, that the way the charter, the strategy and the plan link together, I think is really clear. It certainly makes it feasible for me to understand it. So thank you very much for that. The recommendation to the Audit Committee is that the internal audit strategy at Appendix A to the report be approved and progress against the objectives in the last 12 months be noted. And everyone's happy with that. Thank you very much. Item 10, internal audit plan. I guess the opportunity, the opportunity for us here is to think about whether the plan that's about to be presented to us does all the things that we think it ought to. As we know from sort of prior conversations, the audit team have got a finite amount of time. So, I guess part of what we need to reflect on is whether we think that they're directing that finite time into the areas that we most need them to. So if we could have that thought in mind during Jen's comments and our questions, then I guess that'll feed through to whether we're happy with the plan that's being presented to us or whether we want to tweak it at all. Thank you. Jen.
Thank you, Chair. So this is obviously the audit plan that I'm proposing for 2026-27. Part of that and part of the standards require that I do an analysis of the resource available to us and how that resource is best spent during the year or the period that we set the audit plan for, which obviously for us is a year. You may well have noticed that there is a bit more advisory work. There was a few more days allocated to advisory work this time around, and that's to take into account, sorry. That's to take into account the additional advisory work that's going to be required of the audit team in the run up to LGR. It's not appropriate for all of the work we do around LGR to be assurance based because obviously hasn't happened, so there's no evidence there. And obviously as the requirements in the standards are, ask us to be both an advisory and assurance function. So we do want to be able to build in that capacity to make sure, given that we know that this is coming, and there's certainly lots of work going on towards it, to make sure we've got the capacity to give that advice where needed. The next element there is that it's a risk-based plan. So part of that is that I have to obviously I use the strategic risk register and do an assessment, my own assessment as well of the risks across the council. I'll also use documents and research such as the Institute of Internal Auditors Risk in Focus. There's some local government association work as well that I've looked at. And then mapping across the work that we've done over the previous 5 years, or 4 years, sorry, to be able to see where those gaps are that we haven't provided assurance on already or provided some work on. So you'll see the table there under paragraph 10 shows you the work that we've done previously mapped against the strategic risk register, and then that last column as a result the proposed audits for 26-27. And then the other thing that we've done is I did as well, because obviously part of what we are supposed to be doing and a part of our purpose is to help the council to achieve its objectives. And the council in the last year has produced its top 10 priorities. So I've looked back at the top 10 priorities as well, and to see where we've covered assurance there across those. Given that that top 10 priority list was only developed last year, I've only gone back over, what the audit plan for 25-26 and what I'm proposing here. You'll see that there is only one priority that hasn't got any assurance around it, and that's the local plan. And that's as a result of conversations I had with the relevant officers. Obviously, the work that they do towards the local plan is highly scrutinised. The planning inspectorate come in and they do several reviews. And so the council is getting assurance from there. So we don't need to, when you're looking at what assurance you need to provide, you also need to consider what assurance is provided by regulators. And so we're not over auditing or over inspecting or those kinds of things. So I felt it was appropriate to not look at that area, especially as the local plan is due to be completed at the end of this calendar year as well. So that's the reason for the not applicable there. So on page 110, you'll see the table, full table with the projects that we've decided that are the most appropriate to be done. And like I said, these all map back to either the strategic risk register and or the top 10 priorities. And then our performance indicators hope you identify whether the team are doing a good job. As I say, they remain largely unchanged except for the addition of the indicator around providing ad hoc advisory services. Given that at the beginning of this plan, as you saw, I did the resource allocations saying that we would provide about 60 days worth of advisory work. I've set the target as providing 60 days of advisory work. And obviously that as we go through the next year, we'll see whether that increases in line with the strategy or not. And then that's everything. So I'm happy to take any questions, Chair.
Thank you. Councillor Skinner.
Thank you very much. It's very clear. I just wanted to ask about the proposed audit for land east of the High Street. And I think that subject is slightly different from the others because it is something which goes through a series of milestones to a completion. So have you thought yet when you would be doing the audit and what you would be auditing? So because it would feel very different depending on the time of the year that you were doing it. So just some clarity on that would be interesting.
So what I've agreed with the director is that we will probably do kind of touch points at relevant points in the project. And so we would be auditing generally things like monitoring and reporting, which would be the same all the way through, but depending on the touch point that we are coming into the project at to do, would be looking at whatever was relevant to that part of the project. So obviously there's no point in looking at, I don't know, the actual building or, you know, hole in the ground being made if we're still in project design phase and things like that. So it would very much depend on what part of the project it's at, and it's potentially one that may well carry on into the next year's audit plan as well, depending on the assurance and obviously the risk profile and the resources that we have at the time. But that's what's been agreed so far.
So I'm not quite sure what is meant by touch point.
So obviously projects will go through for certain stages or phases. So we would look at relevant points there when there's a particular stage or phase has ended, and look back at that previous.
So at any particular time, you would look back to see what has been happening in the previous stage and audit that. So that's kind of what you mean by a touch point. So yeah, I mean, that makes a great deal of sense. Thank you. That's fine.
It may not work like this, so apologies, but is there any work that internal audit can do to support the work that finance are doing with external audit, or conversely, could it actually hinder some of those, some of that interaction?
So I think at the moment, because of, as has already been discussed earlier, the timings, and obviously there's quite a short turnaround between that recommendation being made and it needing to be implemented and then external audit doing the assurance work. It's not really, we've had that, me and Jess have had that conversation about whether there is anything we can do to support finance. If those recommendations had been made in August, that might be something that we've, you know, if they'd done a bit more work and they wanted a bit of interim assurance before Grant Thornton came in, then that might have been something we could do. But just because of the timings and things, it's not really relevant at this point. So Grant Thornton are going to be doing that work pretty quickly. So
the question you had earlier on about governance and risk processes, do you want to pick that up as well?
I'm not sure there was too much more I had to add, really. I suppose I mean, I run a risk function. I'm used to being internally audited on a regular basis on what we do to give assurance to the organisation that we're managing risks effectively. I just wasn't sure that how, as a committee, we could get that assurance if there's not necessarily an audit of that function or those processes.
So I guess the question, Jen, is whether that is something that we should be considering as part of the audit plan.
Yeah, it's something that if you obviously, as you've seen, you can make changes to the audit plan if you feel that's appropriate. As I said earlier, though, there would be an extra cost associated with that because you would need to get somebody independent to do that assurance work. It wouldn't be able to be done within the team, so it would be potentially an addition, or but it's I guess it's down to the committee as well as management, senior management, as to whether that's assurance they need at this point in time.
So is that something that is it Hertfordshire that we use externally for some work? Is that something that we could engage them on?
Yes, it's so Hertfordshire do at the moment. They are under a contract to provide some work. Obviously, you'd need to procure that, so it wouldn't necessarily go to Hertfordshire because they've got a finite contract at the moment. Obviously, we do want to make sure we do procurement properly, but yes, they would be able to do an internal audit over on risk management, along with other organisations as well.
So I think, and please tell me if I'm wrong, I think there are probably two questions. One is to Adrian of the SMT. Is this something that you think might be valuable, or you'd like to go and reflect on with the rest of the SMT? And then if you think it could potentially be valuable, then I guess it comes back to the Audit Committee. Is it something that we want to put on the list? And if so, what are we putting it in priority to? Is that the right thought process?
Chairman, I think so. It's also, I suppose, a question for Jen. When was it last done, isn't it? Which we can look at as well, can't we? I'm not sure what the answer is to that at the moment, but yeah. But again, you're right. If it was added onto the list, then it has to drop off as well.
Okay. In that case, can we have that as an action that Jen will check when it was last done, and you'll engage with the SMT to get their views on how useful or otherwise this piece of work will be, and depending on the answers to that, we can then decide at our next meeting whether we want to request that it's put into the plan. Is that consistent with us voting on the recommendation now or not?
It can be if you wish to. You can vote on recommendation with that further action to take place. Yeah, come back to the next meeting.
Fine. Sorry, John. Sorry, Councillor Grint.
Thank you very much, Chairman. Just 2 points. Firstly, I think it's a very well balanced audit plan. So well done for putting that together. But secondly, maybe this is something that I haven't fully understood about what is happening within the council. But there's an item on there which says bulky waste collection assurance. Now, I was under the understanding, perhaps wrongly, bulky waste collection service was being stopped.
Chairman, no, the bulky waste collection hasn't been stopped. Residents are still to pay for bulky waste collections. The service that stopped was the weekend service to town and parish councils.
Could you elaborate? Because I'm sorry,
Chairman, the council provides a bulky waste collection to residents. Residents are able to book and pay for a bulky waste collection. That hasn't changed. It was the other service that was provided to town and parish councils at weekends that was stopped.
Thanks, Chair. Jen, just following on from Steve's point around any additional work you could do for assurance over the GT work. I think it would be best practice if internal audit do validation over the issues raised. I appreciate that we haven't got time for this round, but I assume GT will raise new findings, new observations as part of their next review. And I think it would be good practice that if you could do testing, some sort of validation before GT come back in, and I know they only provide relatively light assurance over their recommendations. I think it would be quite a good way of kind of preempting almost repeat findings. Is that something that could be considered as part of the plan going forward, almost like placeholders for issue assurance from a GT report?
Absolutely, it's something we can consider and we can have discussions around. Obviously, again, it needs to fit in with the rest of the risk profile around the other activities that we do, bearing in mind that assurance mapping and things as well. But it's something that we would discuss with finance if there's significant recommendations that need to be made and we need to provide assurance over. For example, the VFM report previously has raised recommendations around performance management, and we've done a performance management audit and stuff. So it is something that we do consider as part of our audit planning. So obviously, as I say, within this particular instance, timing and things doesn't mean that it means our effort is best spent elsewhere at this particular time, but it is something we do consider.
Great, thank you, that makes sense. Question I hate people asking me in internal audit is, what is chargeable time versus non-chargeable time?
Thank you very much. So yes, chargeable time versus non-chargeable time. Chargeable time is anything that directly benefits the council. So that's advisory work, that's assurance work, that's counter fraud work, that's risk assessment, risk management work. Non-chargeable work is still productive. It's just that it might be associated with training. Our apprentices obviously have 20% off the job hours. That's kind of factored into that chargeability calculation as well. Things like team meetings, any kind of reviewing of our audit processes. So recently we've just done Joe actually has done a recent review of our audit manual. That is, as you can imagine, is very productive and very needed, but it's not chargeable. So there is that difference there. Non-chargeable is still productive. It's just not something that it fits into the work that sits within our authority and our mandate within the Charter.
Great, thank you. I'm glad you said productive time.
Councillor Robinson.
Thank you, Chair. I was going to say, I presume that we are non-chargeable and hopefully we're productive when you have to come here as well. I was going to ask about the point. I think it's absolutely, sorry, I'm going to start. I love the fact that you've taken the top 10 priorities and seamlessly woven that together. I think it's, in fact, this is the most helpful form of the council plan I've seen yet. Maybe it just sings to my heart the way it's set out, but this is really useful. On point 4, delivering our capital projects, can I just check, when you look at capital budget monitoring, the asterisk means it's currently underway, is that right? So you're looking at ones, so are you looking at, is White Oak already finished? Is Spittles Cross, because it's about to end, is that still ongoing? Which of our big current or immediately future projects are in there? Are you able to tell us? Because then we also have the consideration of Bevan Place, which is another major capital project coming up. And it's not in here. And I wondered what made you choose the Buckhurst one versus the Bevan Place, and would there be a way of looking at both, as they are both one's very important for Swanley and the other's very important for Sevenoaks, and Spittles Cross has just been very important for Edenbridge. So it's our 3 biggest towns in there. Sorry, I've rambled a bit, but hopefully you can work out what I'm asking.
So the capital budget monitoring audit, I would say it's underway at the moment, and there will be sample testing that happens within that. So I can't give you the details as to which projects have been sample tested and which bits of monitoring have been done. But obviously that will come out in the report. And in relation to why we chose land east of High Street. That was as a result of discussion with the director, and making sure that as we've said about risk profiles and things, it's is a significant area of future spend. So the other thing we figured as well was actually if we get in right at the beginning, then we've got better opportunity to provide better areas of better assurance as we go through the project.
Councillor Grint.
Sorry, Chairman, I just want to clarify that the audit plan doesn't cover our subsidiary operations of Quercus, does it? It doesn't. And well, can I ask Adrian then, how are the activities in the Quercus companies audited?
Chairman, if I may, the Quercus company have a separate auditor to audit the accounts of those companies. And I think the audit team has done an audit of council companies in the past. But the accounts of the companies are audited by a separate company.
Sorry, yes, I wasn't really so much asking about the audit of the accounts, but the audit of the activities through a sort of internal audit mechanism.
Chairman, only through the accounts.
So within our charter, we only have the authority to audit within the council. So the work that we've done in relation to the subsidiaries previously has been around the council's governance processes to monitor and manage those companies. It's for the companies, therefore, to arrange their own internal audit if that's needed, bearing in mind, obviously, it might not actually be required as part of those companies.
Can I just suggest, Chairman, that's a matter for you to consider, whether you think that those subsidiary companies require more active internal auditing.
Thank you. Yeah, I guess I'm just looking at the table for paragraph 10 showing the historic internal audits, and see that the last internal audit, albeit from a Seven Oaks District Council perspective of Quercus, was in 22-23. I guess I'm sitting here thinking that the Quercus companies are dangerous words to say, reasonably straightforward, because they're certainly the investment properties are fully invested at the moment. Correct me if I'm wrong, Adrian. We're not in a position that we can put more money into those properties. There's only whatever 8-10 of them. They're fully let. I think we understand the situation with those pretty clearly, and we've got representations on the board of those companies. So I'm not sitting here thinking, oh, there's lots of audit risk around the investment properties. I guess where we're investing in housing, social housing, again, there's not a great deal of development year or increase in activity year on year, whatever, 8, 10, 12 new houses each year, which typically we're buying, as last year from Spittles Cross. So those are well understood by both officers and members, I think. And we interrogate when we interrogated Spittles Cross. One of the lines of questioning that I think all members had was around the number of social houses that were being developed and which of those Quercus was taking, et cetera, et cetera. So I'm not immediately seeing sufficient risk there to warrant an increased focus on that in preference to other things on our plan. That's my sense. But if people, I'm happy to be told I'm wrong. It happens a lot at home. So if other people have got a different view, then please do say. Or if you think I'm missing something, then please do say.
Thanks, Chair. Just to clarify, is Quercus, are they solely owned subsidiaries, or are we joint ventures with someone else?
Solely owned.
Yep, solely owned by the council.
In that case, then, could we extend the audit charter so you have rights of audit over workers? So you could actually go in if you thought there was a significant risk there?
That's something that would be needed, that would need to be agreed with the company, the companies. They would need to decide that that's an arrangement they wanted.
If you want to look at how the arrangement came about in the first place, Jim, I don't know off the top of my head. And I think, as you say, the actual number of transactions and movement in the companies is minimal compared to the rest of the council.
Okay. In that case, that's a good shout, Richard. Can we put an action then for, I guess it would be the boards of those companies to reflect on that question and come back to us with a thought as to whether or not that would be, I guess, appropriate, practical. Yep. Is that okay? Any more? Good question, John. Thank you for that. Sorry, good question, Councillor Grint. Thank you for that. What did I say here? So, the recommendation to the Audit Committee is that the plan, that the internal audit plan 26-27 set out in Appendix A be approved, subject to the two actions I think we've taken away. The last point just raised, that the SMT will, or the board rather of those two companies will come back to us with a thought on whether the charter could be extended to include those two Quercus companies. And the previous point that we were talking about around risk processes, that firstly, Jen will let us know when we last had an audit of those. SMT will let us know their thoughts on the practicality and I guess feasibility of such a process. And then depending on those two answers, we can reflect as a committee whether we want to put that into the plan, and if so, what we're going to bump off the plan. Is that a clear enough summary? Okay, so on that basis, is the plan approved? Yep. Good. Thank you very much. Moving on then to item 11, strategic risk register. So before I get into or invite questions on this, I guess a question I'd like to pose to the committee is whether we would like to request a presentation of one of these for a deeper dive at the next committee, and if so, which one. So if you could have that sort of thought in mind whilst Jen is doing her presentation, and then we can talk about that when we get to it. Thanks.
Thank you again, Chair. So as previously requested by the committee, the strategic risk register is now brought here every time. So this is the update from March this year. And you'll see that the biggest difference is obviously there's a new council plan. So the risks are now mapped against the new council plan on page 116. There's not a significant change in the scores or in what's listed within the risks at all. Although there are 3 that are currently outside. No, three, sorry, yep, I am right the first time. 3 that are outside of appetite. 2 of those do have actions, as we would expect, to try and bring those back down to within appetite. SRR2, staff resources and capacity. Obviously, as a result of LGR and some recent resignations, the likelihood of that has increased, but there's not an awful lot extra that can be done to to increase retention at the moment. So it's something, obviously, you'll see there's a sentence there that explains why there's no action at the moment, but it is something that the possible mitigations are under constant review, and they will be under constant review. Then the other one that is outside of, the second one that's outside of appetite is, again, the delivery of capital projects one. Obviously, there is an outstanding action. There were two previously. One of those has been implemented and has been moved up to the controls section of the risk register. As previously discussed, unfortunately, this one has been outside of appetite for quite a while. It is the nature of the risk. It's something that is being reviewed constantly, with, again, additional actions are being looked for, but at the moment it again remains the same as it has done for a little while. And then the last one that is outside of appetite is the SRR 12, and that's the business continuity and cybersecurity risk. The cybersecurity element of this, there's no concerns over at the moment. It's the business continuity side. There's been, obviously, as you've seen, there was a limited assurance audit. And so that's the reason that's the impact is still where it is. And you can see there's the action there for the last actions from the business continuity to be implemented, with the intention that once they have been implemented, that the relevant director believes that will reduce the score. So that should address the fact that it is outside of appetite. Again, Chair, happy to take any questions.
Thank you. Councillor Skinner.
Thank you. One way, obviously, of looking at where we have a deeper dive is looking at those areas which are outside of our appetite. So it might be we could look at those three, or which are outside the appetite, but that might be a way of focusing on it. I wanted to just ask about the scoring on SRR2. Given that we've had 3 senior and important resignations in recent weeks, is the likelihood genuinely at 3, or should it be higher, or has it already been increased? Because I think we've lost 3. Potential of losing more is obviously there, and that's something which I think is deeply concerning. And I know we're looking at it. I'm just wondering if that's an accurate score, if you're confident with that score.
Yes, so that is an increased score from previous. The likelihood has increased there. That is reflective of the current situation. But obviously risk is about potential as well. So it is also considering the impact of LGR, and so it is increased the likelihood in case other people do also move out. And the worry is obviously the concern is that LGR is a factor in that. So yes, that is an increased score.
Is that right, Chair? I'm just not the comment, but not that risk has increased, but if that likelihood score has increased since the last report, and I didn't go back to look at it, then how come the overall score has remained at 12?
Ah, yes, I've just remembered. Apologies. There were some actions previously that were implemented, and then as a result, that brought the score. So in between, it's kind of done this, if that makes sense. So yes, apologies, that had slipped my mind.
Okay, so the likelihood has gone up, but at the same time, controls and mitigants have
against
gone
the
up
other, yes,
to
the other
counteract
issues
it.
have been implemented, and so that's
Okay.
yes.
Like all of us, I think this is an enormous risk that we're facing, I think we all know this.
Thank you, Chair. So on SSR 1, one is, I think we do need to put in there external shocks, international external shocks. I do think they are capable now of coming in and affecting our budgeting. And I would like to see some, I know there's nothing we can do about them, the nature of the beast, but remember, I'm old enough to remember the last one in the 70s, and it can really affect us. So I would like to see that come in. The other one is, I'd just like to be blunt, with Adrian leaving, does that not impact us on delivering? Does that not increase? I mean, we've got wonderful Jessica, but we will have fewer people on the team, and you're trying to do the audit at the same time. So does this affect our score on that item at all? I'm very happy to be told there's no worries, but I just want to ask the question. Then I've got a couple of others, but I'll see to Councillor Grint and then come back.
Adrian, do you want to respond to those two questions about should external shocks and should your departure be reflected in here?
I'm just checking to see if external shocks fits anywhere else on there, but yeah, I can't find it at the moment. But we can add some wording into that. I don't think it would change the score particularly, but yes. Regarding modified, no, I don't think so. The same number of staff would exist. I'm sure the new person will bring in new ideas, etc., etc. You have Jess, so no, should be fine.
Councillor Grint.
I think Adrian is downplaying his active responsibility and his wonderful achievements, the way he has helped the council to manage its finances last decade at least, probably longer. So I think that his departure is have a significant impact on our ability. That's a general comment I wanted to make, but I was actually going to talk about SRR7, delivery of capital project, because what the last 6 months have said to me is that it's not so much delivery of capital projects, which is an issue, which clearly is an issue, question of delivery of capital projects, but it's also the process that goes on before the delivery of capital projects. In other words, the assessment of what projects we might undertake and the suitability of whether those fit in within our appetite for what we wish the council to do, and for example, whether we think we should get involved in activities like speculative building development, which we've never done before. Therefore, I think that the whole this as a whole area of risk, it actually needs to start off before you get to delivery of capital projects. You need to start off at the stage where you're considering with an open field, what type of capital projects might we wish to engage in? And I don't quite know how to put that within this risk register terms, but I just wish to raise that as an issue.
Okay, just to go back to Councillor Robinson's point, this report is written to March. As at March, I certainly didn't know that Adrian was resigning. I don't know if that was communicated internally then. So it may be that that's something that the SMT would want to reflect on when they're producing this report. The SMT and Jen, when they're producing this report to June. In terms of external shocks, I guess the stuff in the Middle East had started in March, but it certainly, in terms of impactfulness, it's scaled up in the last fortnight. So maybe again, Adrian, you could have a think about, or Adrian and Jen, you could have a think about that when you're looking at the next iteration of this, in terms of how it impacts at SRR1 or elsewhere. Yeah, I mean, I think, John, your question, observation, challenge around SRR7 is well made, and it was that sort of thought that I had in mind when I sort of threw out the question as to whether we should have a deeper dive And similarly, you know, Councillor Skinner, your observations around SRR2 and the impact on LGR and the impact of, you know, losing staff even outside of LGR. I think Alan's departure predated discussions around LGR, or even if it didn't, you know, LGR wasn't a sort of such an immediate cloud on the horizon that anyone attributed his departure to LGR, but nonetheless it caused stress in the finance team. You know, it was a contributor to challenges around you know, preparing the accounts last year, just in terms of, you know, being short-handed, and I guess sort of tied into that, how long it takes to get approvals to hire replacement staff and then to interview them and you know, select the appropriate person and then get them to work through their notice and actually get in the building. So it's very much those thoughts in mind that, you know, that made me think that, you know, a deeper dive so that we understand the thinking behind all the words on the page. I think the words on the page in relation to all of these are, you know, absolutely appropriate, you know, encouraging, reassuring in terms of the thought processes that are going in there. But I think it would be helpful, you know, I personally think it'd be helpful to be able to have, you know, a bit of a deeper dig, you know, as an audit committee. So, Steve, did you?
Yeah, thank you. And I agree with that point. I think deep dive would be useful. I think it has been mentioned. I think the external shock piece, I think to me, SRR7 and delivery of capital projects seems like where it fits most. It mentions air calls, economic conditions. We now know got baked in some unfavourable economic conditions coming up. Is management's view that that's moving us further out of appetite than we are now, or is it too early to say?
Jim, I think it's too early to say. It depends on what stage each project's at, really, doesn't it? But I think Jess may have something to add on that as well.
Yeah, thank you, Adrian. So we have been looking at that, and as highlighted at the bottom of SRR7, the overall risk score for each project is looked at, and you know, that is reported. We haven't got any imminent borrowing, and all our current borrowings at fixed rate on existing schemes, and we've got all schemes being reviewed where viable. It did come up as a discussion at Corporate Programme Board, which is with much of SMT this morning, that, you know, for major projects, there are regular progress meetings with contractors, and there'll be updates on risks and identification of mitigations. We have got contingency funding built into projects, and we're looking at building in additional information to the sort of future monitoring reports and dashboards that are communicated both to kind of management at the Corporate Programme Board and at the Capital Projects Progress Meeting, which also involves members. So there is, you know, there are different areas of scrutiny. Obviously, some of these things are beyond our control, but yeah, as Adrian said, projects are at different phases. So for some projects, services and goods will already have been procured. For others, we're still in the pipeline of looking whether they're feasible, and so each project will sort of be assessed differently going forward and reviewing those risks.
Thank you, Chair. I'd like to endorse wholeheartedly well, various ideas about a deep dive into capital projects. I won't spend more on it because I just completely believe that is something that would be very useful. And we are in a unique position here to link between what elsewhere is discussed across 2 advisory committees. In fact, having been present at the discussions can be quite frustrating because one can only talk about one bit and the other one talks about the money side. So I think we can really add value there to the thinking. I'd like to look briefly at SR 12, the cybersecurity, because that is something that I feel I'd just like to be reassured that someone is working soon and fast. That is something where we have quite a lot of control internally in terms of preparing for things. I mean, yes, the dangers come from outside, but it is, you've all heard this before, the difference between unforeseen shocks that come from the outside and foreseeable shocks that come from the outside. And there is, and a lot of the risk here is foreseeable stuff that we see happening. I just don't want to go us, sorry, I exaggerate, but I don't want us to go down the route of Marks and Spencers. It is a fundamental thing to the operation of this council at all, is that we are safe behind our walls in terms of cybersecurity. And I would love to hear from someone, and it doesn't have to be a deep dive, but I'd really like to hear for next time that there's been progress to make us as safe as possible and mitigate, because I feel that risk just does look rather high. Thank you.
Thank you. So if I'm reading this correctly, Jen, the action table in relation to SRR 12, implementation of last action from business continuity audit, due date of May 2026. So that should be done by the time we meet again. And if I understood you correctly, that implementation would further reduce likelihood. Is that right? Or
Yes, so the reason for that this score is outside of appetite is, it's explained in the introduction, is as a result of the business continuity, but not because of the cybersecurity elements. So you'll see there in the assurances that there's lots of work that's done to make sure that the council's cybersecurity processes and controls are all working well. Obviously, and as you saw in the internal audit update, there's a cybersecurity audit currently going on as well. So you should have at the next committee the assurance from that report. But as I say, the slightly high elevated score in relation to this is because of the business continuity element, not because we have specific concerns over the council's cybersecurity controls.
Business continuity is only linked to forthcoming local government reorganisation, or is it business continuity even if nothing changed and we still remained a district council?
So business continuity relates to, it's a bit like emergency planning, but for the council. So it's a business continuity event. So it may be something like a cyber attack that stops us being able to do our everyday work, but it's anything, back in the day it would have been a snow day, or something like that. So it's that kind of thing that stops the council from being able to do its day-to-day work, and planning for that and putting things in place so that actually certain work can be done, and where the priority is to get certain elements done. So, obviously in relation to benefit payments, that's far more important than us doing an internal audit, for example. So the focus will be shifted there. So it's that kind of thing.
It's the equivalent to having the backup generator.
just so that I'm clear, so we're saying that the business continuity audit actions will be implemented between now and when we meet again, and the cybersecurity audit will have been completed between now and when we meet again, and the combination of or both of those things will reduce the score here because they're reducing likelihood or impact or both.
I can't remember what the last action is from the business continuity plan off the top of my head, but it will reduce either the impact or the likelihood, obviously, and that will be reflected in the strategic risk register review.
Any further questions? Okay, in that case, before we get to the recommendation, can I just ask for a show of hands as to whether or not the committee think it would be useful for us to do a deep dive on one or other of these in our next meeting and possibly the meeting after that? And I think given how much we always have to talk about, I'm suggesting that we only do one per meeting. Does everyone agree that that's a something sensible to do? Yep, good. Okay. In that case, and I think it sounds like number 12 is going to get, touch wood, it's going to get fixed. So I guess it's a question then of number 2 or number 7. So can I ask for a show of hands as who thinks that 2 ought to be the priority? No one. All right, actually 1. And who thinks that 7 ought to be the priority? 1, 2, 3, 4, 5. Okay. In that case, Adrian, can we add to, I guess, the work plan that the owners of number 7, Sarah Robson and Adrian Robotham, if it's, if it's still appropriate for you to do it or not. No, just Sarah Robson. She's lost a night, unfortunately. Come and give us a presentation on number 7. We've heard all the words, we understand them, we've thought about them, but we'd like to hear from the owner how they think about it. And I guess to give them a prompt, one particular question that Councillor Grint raised is whether this strategic risk is starting early enough in the thought process. That's okay. Right, thank you for that. So recommendation to the committee, consider and note the contents of the strategic risk register. Everyone happy with that? Yes, super, thank you very much. Right, so that was 11. 12, the work plan, subject to what we just stuck on it. And actually maybe for the next 2, if we could request SRR 7 for the next meeting and SRR 2 for the one after that, please. Just assume that it's going to be there unless we have so many tailwinds that buffet us that we don't need it. So we've got internal audit opinion, internal audit annual report and opinion, and statement of accounts 25-26 progress update and establishment of member working group. Is that it? Surely there's more than that.
Jim, there's more on the next page, but I think as Paris brought the indicative audit plan, he may bring a final audit plan for the future meeting as well. So
okay, all right, sorry, yeah, always turn the page. And member allowance scheme monitoring, counter fraud, compliance team report, annual governance statement, review of effectiveness of the audit committee, strategic risk register, audit committee member development. And I don't think we really have a great deal of option about any of those, do we?
So it's just you have time for audit committee member development, really, isn't it? And the committee has been through every item at least once now, isn't it? It's just whether what's realistic of that.
Shall we scratch that because we've stuck something on the work plan? So out of just politeness, let's take that off. That's all right with everyone. Yeah. Okay. Then subject to those 2 changes, the SRR going on, the audit committee member development coming off. Is everyone happy with that? Super. All right. Thank you very much. I think probably the only thing that remains for me to say is to thank Adrian and Jen very, very much on behalf of all of us. We'll undoubtedly see Adrian again at FIAC and other committees and council and what have you. But I'm not sure we'll see Jen again. So I'd just like to thank both of them on behalf of all of us for their huge amounts of work, great patience that they show us, and the great clarity with which they always present. So thank you very much. And maybe you can all give them a small round of applause. Am I declaring it closed? Yes.